Hey everyone, this is Dayu from Ecom Ops. So finally, we have more than a month of data after the elimination of de minimis, and today we're going to talk about how China to US delivery times, delivery trends have really stabilized ever since the US tariffs and the de minimis elimination. So if you don't know what I'm talking about, please check my previous video on this because I'm not going to go through all of that all over again. So what is the impact of the tariffs? What are we talking about here? What is T11 versus T01, etc.? Like all that stuff, please look at my previous video. And I'm just going to really go deep on the actual data itself. And the good news is everything really seems to be going stable, or as stable as reasonable. So like, I think I can really confidently say that for most cases, China fulfillment to the US has pretty much gone back to normal with some caveats, but despite the continued tariffs, despite the fact that de minimis is eliminated, things are pretty much back to normal. And this is something that we see with our clients as well. Our China to US volume has been really going up recently, and we haven't really been seeing, much issues at all. So now I'm going to talk about three different parts of this. So first is going to be on the delivery times or the delivery days over the last couple of weeks, or actually over like batches in May. I'm going to talk about how prices are trending, and good news is they've been trending very, very well. And then lastly, I'm going to do a little bit of a small comparison on comparing China to US shipping versus a case study of actually air freight to the US and local shipping as well, and how that actually compares. But first, let's talk about the trends in the delivery time. So before I get started, let me explain how this chart works exactly. So this is based on all delivered packages. I can choose some shipping lines here as well. I'm only going to talk about a couple of notable ones. And the comparison is between, so the previous batch was the week of March 10th to March 15th. So that's a Monday to Saturday. The reason why we're comparing on a Monday to Saturday is because then we have very clean data week to week, so that we remove the fact that, Sunday, all logistics is off. And so this is going to be the most accurate apples to apples comparison for each shipping line. And to be clear, this is actually the date, China time, that we actually send out the package, or at least Unit Express, which is a lot of what we're using here, actually scanned as receiving the package itself. So this is the send out date. Now, what are these numbers and what are these shapes? So this is very important, okay? So this part in blue, which is the 10th percentile to the 90th percentile of shipping speeds. So this is like this like big box in the blue here. So this is basically the 10 percentile fastest and the 90 percentile fastest. What this is basically is the 80% range of normal packages. So this is a range that we use normally to kind of give like a rough estimate of what the range of dates are. Now, what I also have added is the 2 percentile and the 98th percentile as well. So this is basically like just a more stringent range, right? So how you really want to define like the range of shipping times, it really depends on you, right? A lot of our clients just consider the 80% range to be very reasonable. Some of our clients like want to look at the 2 percentile, the 98 percentile range as well. That's really up to you. And the 2 percentile on the fastest and the slowest, this is these whiskers right here. Okay, so this box is the 80% range, and then the tip of these whiskers are going to be the slowest and the fastest 2%. Now, anything beyond like 2%, that's when you're gonna start seeing like really like non-standard outliers. You're going to see stuff like wrong addresses, return packages that has nothing to really do with like normal shipping speeds as well. So I would say that looking at the 98th percentile is probably like the maximum reasonable that you want to be looking at in terms of what's a reasonable shipping time range. And then here are the number of parcels within each data range. And then we also have the delivery rate for each batch of these parcels. So I want to clarify what this delivery rate is. This delivery rate is literally how many of these parcels sent out during this range was tracked as delivered formally by our couriers. This actually is lower than the actual delivery rate. I would say that if the delivery rate is like 99%, like 0.5% of that like remainder is just going to be stuff that like happens that doesn't even do with the courier. So maybe like a client canceled the order after it was shipped out, for example, or maybe there was an actual wrong address, they had to change it, so there's a new tracking code. So like basically if you're seeing like 99% delivery rate, practically speaking, it's probably more like 99.5%. But what's important is how this trends through time. And then the reason why we use these weeks is that March, this was before the actual tariffs, is before especially the de minimis elimination as well. So this is like considered the normal baseline. This is what normal shipping speeds are. And then we included 4 weeks after. So remember, de minimis elimination started after May 2nd, but May 5th to May 10th, that's the first Monday to Saturday range. So that's what these ranges are. And then now let's look at the actual insight. So this is looking at the ordinary line, which is our most used line. So this is the ordinary UniExpress T11 DDP line, okay? Now the thing about ordinary is that it can't take battery or sensitive products, but this is the line that most of our clients use for the US at least. So as you see, everything looks like, if you compare the most recent week, so we do actually see like quite a bit of variance in the first couple weeks after de minimis elimination, but that was totally expected. That was when there were still kind of some customs issues where couriers and also US Customs were figuring out how to deal with these packages after de minimis was eliminated. And so we do actually see, especially on this like slowest 2% range, like here, for example, the slowest 2% was going at, 20.7 days. This slowest 2% was 21.4 days. Actually, we can also look here as well. Whereas like previously, the normal was 16.6 days. However, the most recent data looks very, very similar to before. So it could have been as fast as 4.7 days. The average is 8.6 days compared to 8.5 days before. And just generally speaking, like, yes, the 80% range is slightly slower than before, like a day slower, but the 98% range is actually slightly faster than before. So part of this is just going to be like some variance week over week. But basically, like even just looking at the shape of this final week versus the original week before de minimis elimination, at least for ordinary, I feel very confident to say that, I mean, just we're looking at thousands of parcels per batch. The combination of the shipping times and also delivery rates, like I can confidently say that looking at the data itself, delivery speeds for ordinary is essentially going back to normal, and that all of our clients can just go ahead and use it. Now, keep in mind though, that there is always a potential risk that something is going to happen, right? There might be some new tariff, new customs regulations that Trump comes out with. So it's not really certain. However, looking at the data, at least for the past couple of weeks, the month of May, China shipping to the US looks very, very stable. All right, so now let's look at, let me see. Now, unfortunately, the regular line, surprisingly, doesn't actually seem to be quite as stable as before. So previously, the regular line was ranging between 5 to like 11 days or so for the 80% range, or like 4.5 to 16 days for the 90% range. And so recently, like the 80% range roughly is like a day or two slower, and then the 98% range is also like a day slower as well. So it is slightly slower than before, okay? So we don't exactly know why. And we also see something similar for Express as well. So kind of similar. Before, Express used to be just quite fast, actually, like, 4 to 9 days or so in the 80% range. And now it's like 5.5 to 11 days or so. So it is still faster than regular. However, it hasn't really stabilized in the same way as ordinary. Now, both Express and regular, they accept battery products, and they actually go through the Hong Kong airport. So my hypothesis is that it is actually possible that ordinary, it goes to the China airport, that maybe ordinary is just more stable, and that like they're still trying to figure out some of these Hong Kong packages. And we'll show a comparison of the different lines as well, by the way. But one thing that actually that I'm also very intrigued in, because we're actually using this for one of the brands that I actually partner with, is the liquid line. So liquid line is almost back to normal as well. Okay, so there was a lot of issues in the liquid line before, after the de minimis elimination, but actually liquid line right now is not looking too bad. So previously it was 6.5 to 11 days or so, and now it's 6.6 to 12.5 days or so. So this is also looking very, very reasonable as well. And then so some of our clients have been using 4PX Ordinary as well. If you don't know about the details here, watch my previous video. But 4PX Ordinary also looks very reasonable compared to before. These 2 weeks, we had no data in because we weren't really using this line at that time. And then the other thing is going to be the US T01 Ordinary line, which has also been pretty stable as well. But then for that, it's probably better for you to kind of show a cross-line comparison. However, Ordinary, which is the majority of our client packages to the US and probably most of what you're using as well, this is looking really, really good, and I would consider this to be back to normal. Now, so this view is the same kind of information, except we're looking at just like the last 2 weeks of this data, so from May 19th to May 31st, and now we're comparing all of these most commonly frequently used lines after the de minimis elimination. So just looking at these comparisons, so, Ordinary is pretty stable. UST01 Ordinary is actually just very similar to Ordinary performance, as is 4PX Ordinary as well. Again, this is UniExpress Ordinary, this is UniExpress T11 Ordinary, this is UniExpress T01 Ordinary, and this is 4PX T11 Ordinary. And then now, as you see, like regular and express, they're still actually faster than Ordinary. Okay, so don't get me wrong, these are still a little bit faster than Ordinary. However, because especially the express line is still like a day or two slower than before, I caution for our clients to consider if it's actually worth it to just pay more for not really the same level of performance as before. Again, we'll keep an eye on how this trends, if there's anything that we can do about this. But right now, using the express line to the US through UniExpress at least, it doesn't seem to be very good value in terms of the actual additional speed or not much additional speed that it offers over the Ordinary line. And then here's the liquid line as well. But anyways, looking all of this though, across the last, the two last final weeks of May, this to me looks very, very good in terms of delivery rates, in terms of, the delivery day ranges. And I think that those looking at these ranges, this is, by the way, again, shipped directly from China to your customers to the US, okay? And we're talking about 5 to 13 days or so, depending on the line, to your customers to the US. So, this, I believe, is quite good and very similar to before. All right, so that's the delivery times. And now let's look at the costs as well. Let's look at the price trend comparison. Again, this is to the US for different lines, and I'm going to try out some different weights and different lines as well. However, just looking at this trend, this is what this is just the price trends month by month for the last year or so. And then what this table is, it shows so the latest price update was June of 2025, and so that's the cost of that. And then this is actually just through the last year, what was the absolute lowest and what was the absolute max. So the max was right around April, and this is kind of just right leading into the expected de minimis elimination. So this is why that April and also May, early May is going to be very high, and then this is going to be a difference between the low and the high that we have currently. So now just look at this trend, okay? So right now for Ordinary, for something that's 200 grams, it costs $6.78, shipped from China directly to your customers, completely DDP, by the way. No extra duties, just nothing else. It costs literally $6.78, plus any fulfillment fees that your 3PL might charge you directly to the customers. And comparing with before, this is way lower than it used to be almost $10 during the de minimis elimination period when before, when it first started, no one really knew what was going to go on. And it's only like 94 cents higher than the absolute low of last year. And actually right now it's even lower than like, kind of peak Q4 prices of last year as well. And that's for 200 grams. And then let's just play with some other numbers. 100 grams, I mean, kind of similar shape, obviously a little bit cheaper as well. So again, less than $6 to ship a 100-gram product from China, completely DDP with no extra fees, directly to your US customers. And some heavier weights as well. This is try like 400 something grams. So this goes off the chart, but still, like even for 400 something grams for ordinary, it's still like $9.46, which is still kind of cheaper than, kind of peak periods. So look, I mean, obviously you have to make your own judgment on like if this cost is reasonable for your weight, but to me, like this is very much going back to normal. Now let's look at some other lines. So let's just stick with 200 for now, actually. So for regular, very similar. I mean, regular is always just slightly more expensive than ordinary. Let me see, Express. Yeah, so Express, this is where, like, still the similar kind of trend, but Express hasn't really come down quite as much. And again, this is like $8.50 for a 200-gram package, which is not bad, delivered directly to your customers. Again, DDP with no additional fees. However, this is where I kind of go back to my point where it's like, previously Express would be like 3-4 days faster than ordinary. It's not anymore, so I'm not really sure, depending on your margins, like if using Express is absolutely worth it right now, because ordinary seems fine and Express is kind of just more expensive for not really that much improvement. And then liquid lines. Oh, so this was off the charts. But liquid lines. So liquid lines is something that really has a huge difference, because previously it used to peak at $13 or $14 almost for a 200-gram product. That was crazy, actually. That was very, very expensive. So for a lot of our clients that sell liquids, cosmetics, like it was just, honestly, I was even telling everyone that it was a bad idea to ship from China. You should probably ship from a US warehouse. But this dropped significantly over time. So now it's at $8.08, and that's even cheaper. This is like the cheaper than it ever was, which is like actually like really impressive for me. Actually, again, this is DDP, this is duties inclusive and no additional fees, despite of the tariffs, despite of the de minimis elimination. And yeah, like I'm not going to go through all the rates, but yeah, the point here is just looking at this trend, like from pricing wise, everything does seem to go back to normal. On average, it's still going to be more expensive than previously before de minimis, before the tariffs, because even though that this is a DDP method, like there's still some tariffs that the DDP provider has to pay for, right? So it's always going to be slightly more expensive with the tariffs existing, with de minimis still gone. However, like you guys can decide. I really think this is really not bad, back to normal for most sorts of packages. Now, keep in mind though that I frankly do expect that prices will trend up through the year. So we've already had noticed that. So we don't have the pricing here for the UniExpress T01 line or the 4PX ordinary line, because those are just not really available to everyone. And 4PX is a little bit complicated because they add a duty fee as well. But T01, a bunch of our clients use it, but that's not available to everyone publicly. So, and those prices are all varying. T01 tends to be a little bit cheaper than ordinary T11. However, recently, like as of just yesterday, there was an announcement that the TO line was raising in prices. And I think that there's an expectation that maybe any day now that there probably is going to be adjustment in prices as well. So this may actually go up by at least a bit. And this is actually an indication that, well, there's just more demand, right? I mean, the good thing about China shipping line stabilizing for the US is that you can start using them. The double-edged sword is that there's more demand, which means market prices are probably going to be shifting up for stuff like air freight and, kind of processing. So just do expect that this price, I do not expect that this price is going to stay this low, especially as we go into busy season, going into Q4. I do expect that this price is going to go up higher, but I don't expect at all that it's going to be anywhere close to this peak rate during, that going into de minimis elimination, where like, honestly like $10 to ship a 200-gram package. It was, pretty expensive, right? All right, so that's for the pricing as well. And then just one last thing is so this is like a very simple sheet that we created for a client that we're working with on just like a very simple comparison of what it would actually mean to compare the end-to-end cost of shipping from China through Ecommerce versus the comparative cost of using air freight to then use a local 3PL and using something like UPS Ground Advantage, which is like a relatively cheap, like good value shipping line, okay? So using this example, you're just using ordinary as an example for something that's 250 grams is, so let me break each of these lines down, is that because like for China, there's no air freight, so we don't add it in here, but this is an estimate of how much it would air freight, 250 grams. And Ecommerce doesn't charge a fulfillment fee on one unit, but then most 3PLs do. So like, so this one, for example, charges 125. And then the shipping rate is also calculated based on weight and zone as well. So playing around with this is that now currently based on the most recent rates as of the end of June 2025 is for 250 grams end to end, it costs $7 to get to your customer in the US versus $9.29, including all of these costs to get your customers. Now, there's also a big difference in lead times as well, right? So in terms of like getting it to like from your factory to your either China warehouse like Ecommerce or your freight forwarder, it's going to take a few days, 1 to 3 days. And then so now air freight to the US 3PL is going to take 10 to 15 days extra. Whereas like, well, it's already in like Ecommerce or China warehouse, so there's no additional lead time here. Now, frankly, delivery times from Ecommerce to the end customer using ordinary is obviously slower than US shipping, right? We're looking at maybe 4 to 14 days versus maybe 2 to 7 days for US shipping using this kind of rate. So like, it's a decision you have to make. Do you want to have more stock in the US, but actually potentially be more expensive if you're using air freight? Or you could potentially use sea freight and lower your freight costs as well, but you're gonna have to hold more inventory and have longer lead times as well, right? So that's your decision to make, and this is just using ordinary line. So I'm not gonna talk too much about here because in a future video, I'm gonna go through a much more involved deep dive on how do you best manage hybrid fulfillment in terms of cost, in terms of inventory management and things like that. How do you consider using different types of freight and costs, and how does that impact your cash flow and balance sheet? So all of that is like a whole video in itself, but just want to kind of give you a very quick snapshot of something that some of our clients are very interested in, is what is the actual comparative cost nowadays of end-to-end shipping from China to a US customer versus the alternative of using air freight and local last mile fulfillment as well. All right, so that's all I have for you today. Now, unfortunately, I can't share these links with you. These are more for internal use. If you're an Ecommerce client, you're talking with someone from the Ecommerce team, just ask for this information. They'll be able to provide it for you. This is really not something that we're continuously going to update and we share publicly. Although if there is actually like a lot of requests for something like this, we could actually consider creating something like this that's more updated. However, I'm not really going to focus on updating this in terms of like my own like YouTube content anymore, because like it's pretty stable, and any kind of like more interesting updates, more notable updates, please just, if you're a client, we'll make sure to let you know through your client groups. Or please do follow my Twitter account, follow me on Facebook. That's where I am going to be able to kind of put out more relevant, timely updates that doesn't require kind of a long video like this. All right, but anyways, so again, like just very excited to kind of see everything stabilizing despite the tariffs, despite the de minimis elimination. And recently everything has been quiet. So I think that it's pretty safe for us to consider that things are pretty much back to normal in terms of the actual China to US shipping times and shipping costs as well. And I've always believed that in terms of optimizing your supply chain, it's not just about US or China fulfillment. It's about using the right hybrid model depending on your brand, your goals, and your specific product. So that's going to be a focus of what I want to create more YouTube videos around in the next couple months or so, is now that China fulfillment is really kind of just back into the game, back into a serious consideration for part of your supply chain, how do you actually more optimally plan for hybrid fulfillment strategies, especially now that it's the 1st of July and we're going into like August? That's exactly when you need to be starting to plan for Q4 supply chain planning. So I'll be putting out more videos on that. So please follow me here on YouTube, follow me on Twitter and Facebook as well. We'll be sharing other relevant content pieces as well. And if you're interested in working on e-commerce or China fulfillment, we do have some limits, some restrictions on our order volume, more than 30 orders per day ideally. But if you think you're a good fit, you want to work with us, please let us know. We'll add a link below. Talk to us, and if we're a good fit, we'd love to work with you. But otherwise, this is Dayu from Ecommerce. Catch you guys next time. Thank you.